Hello and welcome back for another Agix price prediction update, and in this video I'll be diving deep into the technical analysis here on the Agix chart and also give you my next price targets. And before I do so, show some love by first giving this video a thumbs up, subscribe to the channel, and also check out the channel membership. And at the time of this recording, Agix is holding above a key area of support at around the $0.227 mark, which is now acting as support for us to continue gearing up. And as long as we continue holding above that key area of support, then I'm expecting Agix to continue gearing up in a move that could help us get to the next key area of resistance at around the $0.2585 mark. And the moment we also manage to break above that, then we can watch out for a successful retest before we can continue gearing up and continue unlocking higher prices. We also need to have in mind that in case further breakdown continues, then this key area of support is the area that we need to keep our eyes on. And if by any chance we lose that key area of support, then we can expect further breakdown here on the Agix chart to the next key area of support at around the $0.2 mark. Agix has also continued to obey the Elliot wave structures, and if I zoom out on the charts, you can see that after seeing our low on the 10th of June, after seeing the massive crash, we saw a low at around the $0.17 mark. Then we started a very nice recovery to the upside, where we first put in place this 1-2 setup. Then we have this other 1-2 setup, having this as a first wave and a breakdown move in the formation of this wave 2, in a move that has also managed to get into the minimum retracement areas highlighted on the charts using this red target area. And there are high chances that the low for the second wave is in, and whatever we are seeing at the moment is the start of an impulse in the formation of this wave 3. And because of the impulsive nature in the formation of this wave 3, I'm also expecting to see a 5-wave structure to the upper side, having the wave 5 fully maximizing our target areas. And there are high chances that this is the move that is playing out here on the charts, where we can term this as a first wave to the upside. Then we have been seeing a bit of a breakdown move in the formation of this wave 2 before we can expect a wave 3, then expect a wave 4, and then a wave 5 to the upper side. And in my yesterday's video, I also gave you minimum target areas for this second wave by connecting the Fibonacci's from the low of the first wave to the high of that wave 1, giving me a minimum retracement area between the fib level 0.5 and the fib level 0.78, which is the area between the $0.24087 mark and the $0.22449 mark. And it is within this red target area that we can expect to see a reaction to the upper side and start an impulse in the formation of a larger Elliot wave count 3. And that is what I'm expecting here on the short-term point of view here on the Agix chart. And zooming out to give you my long-term point of view, where you can see that Agix first gave us a low, that is the November lows at around the $0.03747 mark, then gave us this impulsive move in a 5-wave structure, having the wave 5 giving us a high at around the $0.67 mark. Then we saw a breakdown move in the formation of this wave 2, fully maximizing minimum target areas highlighted on the charts using this blue target area. And there are high chances that the low for the second wave is now in, and we are now ready for that massive pump in the formation of that wave 3. And for us to get enough confirmation that the low is in, first Agix needs to give us a complete 5-wave structure to the upper side, followed by an ABC corrective structure. Once you see such a movement here on the charts, then that will be enough confirmation that the low is in, and the start of an impulse in the formation of that wave 3 has now started. And that is what I'm keeping my eyes on here on the Agix chart on the long-term point of view. Also taking a look at the indicators on the RSI, we are trading at around the 39 mark. Also taking a look at the MACD, we have been able to print a bearish cross, suggesting further breakdown. So let's be patient and see how that plays out, and I will be keeping you updated.